Hey everyone, my name is Joël Valenzuela, aka the Desert Links, not Desert Linux. Don't get any ideas. I've been involved in cryptocurrency since 2012, 2013, living entirely off of cryptocurrency since 2015, and a part of the Dash community since about 2016. All right. So I have been living basically entirely off of Dash over the last 7 years now, going straight. And there's through good times, through bad, there's been plenty of reasons to keep on doing that. I definitely believe in financial sovereignty above it all. But I'm not here to sell Dash to you or sell my story or whatever. Um, I'm here to fix problems. And right now, Dash has a very big problem, which comes in all sorts of shapes and sizes, and a lot of different perspectives might, kind of go around the exact same thing, which is that people see the price is not doing well. Oh, that's the biggest metric you can see for the problem we have currently. But it's more importantly, um, Dash has experienced a stagnation over the last few years. There's a giant run up in attention and, of course, price in 2017, the whole Masternode boom. And then since then, it's been just like a slow, steady decline out of relevance, out of whatever else you want to call it. And everyone acknowledges this fact at this point. Um, and there's a lot of people who get fixated on the price, the actual speculative price of the token, because that's the one obvious metric that you can kind of point to. And it's kind of funny because for many years Dash focused on being usable as a currency, as actual money, as a payments technology, despite this, right? In spite of token, like, oh, don't worry about the price. We're, as Felix just commented, we're in it for the technology, right? That's what people said. And I don't think that people have changed their minds necessarily. It's just that what I would posit is the metric that has we've been paying attention to the wrong metric. We've been telling ourselves this is going to be useful for real things. But the only metric we had for that is price, which we said is not indicative of that. And so the metric we did have was nothing. Let's just be super honest. We had no metric for success. And so the motto for Dash shouldn't be Dash digital cash. It should be Dash build it and they will not come. Think about that for a second, because Dash has built some very interesting things over the years. I think Dash has been one of the more innovative projects, at least up until like the recent years, maybe including now once Evolution's out, right? Fingers crossed. But the usage has really sort of lagged behind a lot of other different projects. And it's really hard to kind of put a finger on this, but I mean, obviously transaction counts, like Dash does around 10,000 transactions a day. It was around the same in 2017, got up to around the 20 to 30,000 mark at some point. But either way, all those metrics are very easy to game. Who knows what a blockchain transaction is? I could just be going ping, 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 ping back and forth with my wallet and then just like faking volume. What actually counts as a real transaction? The honest truth is what the network counts as a real transaction. What is the anti-spam filter for Dash? It's fees. And it's been ahead of us all the time. We've always seen it. This is really what makes things matter, is the Dash fee revenue has remained almost nothing. And this is a little bit of a it's a little bit of an endemic problem in all of crypto today, with a few major exceptions, but those exceptions are really doing quite well. And so we can kind of learn a lot from this. The thing is, like it or not, the way Dash is structured, the way Bitcoin's structured, the way all those cryptocurrencies that are similar like that are structured is almost like a virtual company, almost like a decentralized company, in that the network has things, it has costs, and those costs are compensated. in the beginning, through the whole inflation curve of Bitcoin, and of course Dash similarly, although much longer, that's like startup capital. But then it's supposed to transition to fees, just like a company's supposed to transition to revenue. Everyone knows this. And, or I would say, if someone has a problem with this, then just either get out of Dash or try to radically change Dash, because that's literally the structure. Dash is built to die without fees. Fees aren't coming in. That is number one. That is exactly where we need to be focused. That is exactly our revitalization plan number one. So let me throw some stuff on. I could just say bye and just end it there. You get kind of the main gist, but there's a lot more of this. So let me work on a screen share. Okay. Let me get to, there we go. This one. All right. Let's see. Tell me when you guys tell me when you guys see it on the screen. Fee chart. This is the fee in reward historical chart, also known as percentage of operating expenses for the Dash network that are paid with revenue, right? Actual customers, paying customers, revenue. And if you look at this, roundabout, sometimes we get to 0.1%, like some 0.15% on a good day. This is not very good. Basically, right now, it is negligible. By the way, yes, Infinity Banana, that is a Doge pillow behind me. I bought it with Dash. Thanks for asking. But the fee and reward is negligible, meaning Dash has almost zero revenue, zero paying customers. It's has not kind of turned over in that way. Now, if we compare things, right? Let's compare to Bitcoin's fee and reward. Bitcoin has done. Bitcoin has a serious problem of who's going to pay the miners once the block reward runs out, right? But it isn't as bad of a problem. On a typical day, you get like 1 to 2, maybe 3%, 4% of the block reward is actually paid by paying customers. Sometimes you get giant, so it gets spikes here, like or about a year or 2 years ago, 28%. And then during the big ordinals and BRC20 surge of this year, you got up to 42%. That's actually pretty good. That's actually, you can basically see that, oh, in some cases, people will be willing to pay to actually use the network, and the network is not just going to die from like lack of money. It's not going to go broke. And unfortunately, with Bitcoin's case, I have to add the little caveat that um, their Bitcoin is only making this kind of money when people will be willing to pay ridiculously high fees because it has refused to scale. This isn't like a healthy transaction growth like other chains, right? This is not entirely a good sign, but at least the money is coming in. It's just like saying, oh, like your coffee shop only makes a profit when the Starbucks around the corner is closed. And then everyone will only come and swarm. You have like lines out the door of your place. I mean, okay, that's not ideal, but at least you are profitable some days, unlike Dash, which is profitable no days, no months, no years, not at all. And the only way, under the way Dash is operating now, I'm not talking about technically, by the way, but the only way it works the way it is going now is if you have speculative investors keep on coming in and saying, "Oh, I think Dash is going to be great someday. I think it will actually have users someday. I will pump the price." So therefore, the diminishing block reward is enough. The diminishing inflation is then enough to pay for the network to keep operating. All this stuff, all this talk about masternode ROI, things like that. Masternodes are paying most of that ROI to themselves, right? They're the largest holders of Dash. They're being inflated away and then getting that back. So it's kind of like a circular, not even a value creation machine. Dash needs to absolutely kind of, put some wins on the board here. Now the thing is, Bitcoin, as we can see, people pay around 50 cents, maybe $1 for a Bitcoin transaction. And then during times of insane like pressure, when everyone really needs to do something in a time sensitive way, then they'll pay more and the fee revenue goes up. Um, Almost no cash coin has any kind of a reasonable revenue right now because people won't really pay that much for that. This is what we got to figure out, right? What will people pay for with Dash, and how can we get that to happen? So, if people, which by the way, I should say, if people will pay for Dash, if they will actually pay for transactions, it's not only does that offer a path to profitability, but it's also a good sign of what you should build, even if you're not charging them enough to pay for it. So we can always look at market research to see what actually, kind of works out for this stuff. Well, just real quick, let me hit the Thorchain pool price. So Thorchain, cross chain, you know, DEX that collects trading fees. Uh, each of these pools kind of has their own, profitability and stuff. But like, for example, like the Dash network generates, I mean, I don't have it in front of me, but something in the range of like, $50 US a day or something in fees. Nothing really, really low. But the single Bitcoin pool on Thorchain in 24 hours generates like 8,000 about, or almost 10,000 for just the Ethereum pool. And then you go down the line, like even the Litecoin rune pool, which is just when people are swapping in and out of Litecoin on Thorchain. That's still several times what Dash makes in a day in fees. Thorchain is a relatively new project, but is making money. It's already revenue positive. It's already having people pay to actually use the network. And those fees are going towards not only liquidity providers, but also nodes. All kinds of things in order to actually make this network profitable. This is a model we should kind of hope to watch. Now, if you look at this real quick, the transaction charts. This is about the last 6 months for Bitcoin Cash, Litecoin, Monero, Dash. And obviously, Bitcoin Cash has had these weird little spikes because they're experimenting with a lot of like app-based things because of the cash tokens upgrade. But let's just like on a different day from that, you get Bitcoin Cash 17,000, Dash 11,000, Monero 18,000, Litecoin 117,000. So not only is Dash the lower one of the pack of all of these right now, but you can see that Litecoin has won for now. Litecoin seems to, I mean, if you go all the way up to the 600,000 transaction days and stuff, Litecoin is doing better than any of these other payment coins at actually getting people to use it. But how's that working out for them? Okay, the Litecoin fee and reward is similar to Dash. I mean, some days it might be a little bit higher, but Litecoin's fees are so low that it's not profitable, even though it has some actual transaction growth. So if you think about it, if Dash 10x this transaction volume right now, it would be in Litecoin territory, but still not really profitable. And that's an issue. That's something that we absolutely need to solve, because what we're finding out is people will pay, but they will only pay for certain things. Another example, real quick. Uh, Let me actually refresh this tab here. Some stats on the Maya protocol. Now, the Maya protocol is a Thorchain fork. It actually supports Dash, which is why many Dash people know more about it. But Maya is relatively new. It's a relatively new project. Like, it's just only been working for a few months now, and even then, it's been working very little. And it's kind of like had some sporadic issues. And when we're all the assets listed at launch were the same ones as Thorchain. So why not just use Thorchain? Like, there's not a lot of reason to use Maya other than Dash, which just came online and then has had some transaction sticking problems. So with all these things considered, you still, under the swap fees right here, still have some transaction fees, right? Let's say like a good day would be 500 or so dollars in transaction fees, i.e., like 10x what Dash does, right? On some certain days. And the unique thing about Maya, which is why I believe you can expect this chart to go up over time significantly, Maya does not have inflation at all. All coins were created at launch. The only way the network is paid is when people actually pay a fee. They're in the deep end, right? They don't have this long, like 10, 100 year, whatever Dash has of living off of investment, living off of inflation until, okay, maybe one day we'll be profitable. No, they have to be profitable today, or they're going to run out of money fast. And so you'll see a lot different behavior because of this. Remember, in the free market, people respond to incentives. And if your project needs money to stay online, you need to start looking for those sources of money. If that source of money is investors, well, you'll either just hope that they're patient and hang around while you're just milking them through inflation over year, or you'll make other weird speculative hype promises to get more capital in, and then just like, okay, well, maybe one day we'll be profitable. But that's really fickle and unsustainable. At some point, you need to actually transition to fees. So if we're looking for paying customers, what are people paying for? Well, here's the crypto fees breakdown. And if you see, Bitcoin is a distant number 2 on the list, but still it's hanging in there. For Bitcoin's case, people will pay to transact in, to move what the market sees as the best, most secure and stable money in the crypto world right now. Whatever we think about that, that's what the market thinks currently. But that's the only thing that people will pay to just send for the most part. Pay anything real. Ethereum has tons of fees because not because people want to send Ethereum back and forth, but because Ethereum lets you do so many different things, so many things that people want to do, whether it's stable coins, complex DeFi things, doing trades, minting NFTs, whatever. Ethereum's a business, and business is booming. And if you look down this list, what else do people pay for? All these shaded ones are like, protocols and stuff like that. They're not independent chains. But then, number 3, which is at times has actually eclipsed Bitcoin in fees, is BNB, which is, Chinese Ethereum knockoff, right? But the same thing. And Arbitrum one is the biggest by fee volume, at least, Ethereum layer 2 right now. And then you go Optimism, same thing. Solana, even though it's a completely different blockchain, is still operates under that ETH style kind of premise. Same thing with Polygon, but that's an L2. Cardano, 5,000, not super high, but at least it's something. And then when you start going down, now you start seeing like the payment coins, right? You get Dogecoin, which is like a little over 1,000. Ripple, who cares? Whatever. Monero's 976 in a day. Start going down. Bitcoin Cash, $160. Go down to Decred, 45. And yes, we have talked to crypto fees about including Dash on this list, but I don't really see a point if it's going to be like $30, $40 on this list. That would just be a very sad kind of a thing. But so, not to just say, oh, this is great, this is bad, whatever. This hopefully should just give you some ideas of what people are willing to pay for. It seems like they're not willing to pay to just send token unless it's Bitcoin, but they're willing to pay to do a bunch of other stuff. That's just from this thing. We can kind of break down further though. Here's an interesting fact, right? People will pay for privacy. Now, the whirlpool, which is mentioned in this tweet, right, is basically the one of the largest coin joins on Bitcoin. It's this big pool of Bitcoin that gets kind of coin joined around, very similar to the Dash model, except I would say lower tech, but again, I have to do some exploration to really see if that's true. But it definitely doesn't have the free mixing fees like Dash does, and it does not have the spending of all toxic change, of doxic change as they call it, like Dash does. It just, you have to manually make sure you don't spend those and ruin your privacy. But the point is, there is more Bitcoin in the whirlpool than in the whole of the Lightning Network, which being 6,400 Bitcoin as of the end of last year, right? And I don't really have up-to-date stats on that, but the point is, people will be paying a lot of money to get privacy. Now, of course, on Bitcoin, imagine how expensive it is to send Bitcoin. Then imagine all the times you have to send back and forth to mix. Oh, I'm going to send here to mix and there to mix. People are willing to pay for privacy, and that was kind of Dash's claim to fame and kind of what a lot of people still think about Dash. But the sad part is, I mean, we don't have Dash Radar around anymore, but very few people use Dash's privacy functionality, almost none, you know? And part of that is because the only way you could do it is through the full node wallet, which is how just about no one uses it other than us hardcores maybe watching this presentation. Everyone knows my point of view on this. I've been harping for a longest time on getting mixing in mobile. I've put in a lot of incubator concepts to do this kind of stuff. I've been trying to get Electrum working or whatever, trying to convince people to get it working because Electrum had this or whatever. All that's beside the point. The only thing that really matters is we do need to actually we built the build it and they won't come strategy is very much alive and well here because we built something, privacy, that people will provably pay for, but we're not using it. And I think that, like, let's just say people will only pay a tenth of a cent for a Dash transaction. They'd be willing to pay a few cents for a Dash transaction if it has privacy. And one of the easiest ways to jack up that fee revenue is to take existing Dash users and get them to use privacy, get them to use CoinJoin, Private Send, whatever we want to call it. And then all of a sudden you have so much more activity on the network, so much more fees. And it's also a reason for people to actually use Dash. Again, left out on the table, one of Dash's original innovations, and just it's not being used. We need to start actually using that. And for that to happen, we need the tools for that. Here's another statistic. Tornado Cash, right? Tornado Cash, even today, right? Let's see, how much did it make? The Tornado Cash smart contract is making orders of magnitude higher fees today, despite the founders being arrested, it being sanctioned, all this kind of stuff. All that, despite all that, Tornado Cash is still making a ton of money relative to like the Dash network today to make people's funds private. And this is all it does. It makes your Ethereum private. And people are willing to pay a whole lot of that. I have to look up where, let's see, where was the highest? There's the documents in the actual link kind of have a lot more stuff on this. If you want to really go deep, you can get all that. So I won't bore you with that right now. But there's a lot of money that goes and pours into Tornado Cash still to make it private. Now, my friends over at Railgun, great people. Railgun offers like a Zcash style privacy for Ethereum, for Polygon, for Avalanche, for all whatever those others, right? And this is an interesting stats dashboard. You can see exactly how much money is in there, how much how much they pay out, etc. But from my conversations with the team, they're making around like a couple $100,000 in fees per day, right? So this is just for a single Ethereum smart contract. Again, it's not the only way. It's not the built-in way of doing privacy on Ethereum. There is no built-in way. This is a way of doing that. And it's making tons of money. It's making half what Bitcoin is making in the course of a day. Just this one smart contract there, because people want whatever they're doing. They want privacy. Privacy is big money. And which, by the way, Felix, you do not have to sync the whole Dash blockchain if you're using a light client. That was changed with deterministic masternode lists. You just have to sync that up, but you don't have to actually run a full node to mix anymore. So, I mean, that's been the case for years. And unfortunately, this kind of doesn't, and also as Michael Cluster commented, you can mix on a prudent node. But the point is, people pay big money for privacy. Now, the next thing, right? Usernames. Now, this has been kind of a little bit of an interesting thing because this is not me harping on, hey, there's something that we have been able to do the whole time that we haven't done. This is WhenEvo. Classify this under evolution. But ENS, which is the largest naming service, and ENS is like a domain name type thing, but allows you to associate web page with it, but also your static single crypto addresses, no XPub as far as I know. And just registering that in a public like .eth domain has made, tons of money. So ENS, this is from last year, right? ENS generated about 4.3 million in revenue in August. So this is, again, we're talking about just one smart contract, right? Just one smart contract on Ethereum that gives people these little clunky usernames. Let's be honest. I mean, I've used them before. They're not that great, but still, people want. There's a lot less clunky than just, oh, here's my address du jour or whatever, and like big long copy. You can make a mistake, whatever. Just this is generating millions in revenue, right? This is a great opportunity for what Dash can offer, and in this similar kind of a thing, right? We got unstoppable domains, which is another, it's another competitor to Ethereum and stuff. And so, sorry, to ENS, but also on Ethereum, also on Polygon, things like that. It says the startup has amassed over 240,000 customers and posted a revenue of 53 million last year. It's also profitable, they said. So usernames are something else people will pay money for. But let's remember, by the way, that like privacy, people are willing to pay for privacy on Bitcoin and Ethereum because they're willing to do that. The willingness to pay that much for privacy is probably lesser on something that's not Bitcoin or Ethereum, but people do want to pay for that. Same thing with usernames. And this is something that obviously when Evo launches, we are going to have Dash usernames for Dash, also known as usernames for nobody because no one uses Dash. I mean, we do. I'm just saying on the whole, there's a limit to how much that is actually worth. I think it is absolutely imperative that we start creating wallets and services and things like that for many coins that use Dash usernames. Why don't you have your, say, Thorchain wallets or whatever, your Maya Protocol wallet? Why isn't that just a Dash username for all your different coins? Why can't you just get like a multi-coin wallet using Maya to swap to whatever? You can just send your Bitcoin using Dash as the plumbing for the username contact list. Use your, well, if people are like, I only like Monero because private, whatever. People just want to use Monero. Why don't they use Dash usernames to send their Monero? Why would you limit what Dash can do and who will pay for Dash for? Well, only people who want to use this exact use case that pretty much no one yet has wanted to do. So we absolutely need to open up the username use case to be able to register multi-coin wallets as well. And so what else are people willing to pay for? Are people willing to pay for fast and cheap transactions? And the answer largely is, well, no, because Bitcoin Cash is the cheap, uncongested version of Bitcoin. Ghost town, right? As of right now, I hope I know BCH fans get all mad at me, but if I'm being this critical of Dash, I can go always. We just addressed Litecoin. That Litecoin is actually seeing some decent usage, and some payment processors are showing that it's growing and even flipping Bitcoin in payment volume on stuff like BitPay. However, like the actual like money people will pay to do that is like not very much. But what people will put some money towards, at least, they will to pay less to send things fast on Bitcoin, at least to a certain extent. I don't know if you've ever used the Lightning Network, like actually used it, but it sucks. It's the actual user experience of sending and receiving on Lightning, on balancing channels, on failed payments, all this kind of stuff is just like not the best at all. So you're getting a bad user experience for the most part, but you are getting instant finality of some sort where when you send a Lightning payment, it just like, yeah, you can just walk away with it. You don't have to wait for confirmations. And at the same time, you're getting to pay much less than like whatever the on-chain fees might be, at least for now. And so we have, what is $118 million worth of Bitcoin in the Lightning Network. Now, maybe I'm crazy, but maybe what if we could take that and put it on Dash? Take this and move it over here. What if we could get people to use, because Dash is fast and cheap and instant and secure and doesn't have this awful user experience, we should be looking at ways of using Dash to not only just say, well, look, Dash is easy to use, but to send other cryptocurrencies, for example. And so we're getting to the stablecoin topic in just a little bit, but think about a Bitcoin coin. Think about a just call it the Thunder wallet, right? In reference to the Lightning wallet. A Thunder wallet for Bitcoin. It's a Bitcoin only wallet that lets you have on-chain Bitcoin and Dash Bitcoin, Bitcoin Dash. That's a Bitcoin pegged stablecoin on Dash, for example, and uses Dash usernames. People are going to be like, oh, I love Bitcoin. It's so fast. It's instant. It's cheap if you want to put it in your little Bitcoin Dash balance or whatever. And you can just send from username Venmo style. It's just so fast. People wouldn't even know that they're using an altcoin or shitcoin or whatever. That could be an absolutely huge user experience, because clearly if the maximalists are using all these crazy like custodial solutions for Lightning, then, which they largely are these days, why couldn't they just use something like that instead that just does the same thing, but actually makes Dash holders rich when Bitcoiners want to send their stuff around? That's actually thinking like a business, right? So let me just refresh this thing. Hold on a second. CoinGecko's being all weird on me. So think about this. There's a lot of money in stablecoins to the tune of 123 billion, it looks like. That's the other thing. What do people want to send? What is the market telling us that people want to send? They want to send money. And what do they consider money? Not crypto today, especially not the way it's volatile. There is a big industry in stablecoins. Stablecoins are actually the winner of adoption over the last several years, clearly, far and away. People want what crypto has. They want that anyone can set up a wallet. They want that you can do crazy DeFi stuff with it. They want that it's, you don't have to go through institutions. They want all of the positive awesomeness of crypto, but they want to use it to send dollars today. Obviously, that will change over time, I think. But it's, in the meantime, a giant business opportunity to the tune of $123 billion. And so if you look at the stablecoin, where is it down here? The stablecoin market cap, stablecoins in the last just 3 years have experienced an absolutely massive boom, as you can see here, far outpacing the growth of like Bitcoin and Ethereum and other assets like that. The stablecoin market, of course, stablecoins do not go up in value. That's kind of the point. But the business of stablecoins goes up. And this is something we cannot ignore. I do not, and as Michael Cluster points out again, yeah, Tether is making billions of dollars a year. That's actually like, and if we look into, we go to Etherscan, some of the gas trackers. This is the biggest, the top 50 gas guzzling smart contracts. Of course, you have Uniswap, Tether. Tether is generating $111,000 over the past 24 hours. $111,000 in fees, in revenue for Ethereum per day. That's just Tether. There's other stablecoins out there. It's just Tether, and it's just on ETH. It's not on Polygon, Arbitrum, Tron, Solana. It's not on any of those other things. And then if you look down to where is USDC? Yeah, USDC token. That's 26 grand a day. Again, we're talking orders of magnitude higher than what Dash is generating. And this is for the awful experience of using it on Ethereum. Of course, we have to remember Ethereum does all these other things, so you can do like complex DeFi stuff with stablecoins. But the point is, people will pay a lot of money to use stablecoins. And I know this is something that, XK and some other people have been really beating the drum on. Something that I've been kind of a late adopter to. Let me be perfectly honest. I haven't been ahead of the curve on this at all. But if we're able to use Dash as the gas token, we can actually get a lot of adoption. And payment data corroborates this, for example. So this was Bitrefill's transaction data that they released. And if you can see, not others, this teeny sliver in here, Dash is hidden in there somewhere as far as what people use. People use Bitcoin, Ethereum, Binance Pay, which it's not an actual coin, but whatever. But then look, Tether on Tron, USDC, ERC20, whatever. Tether on Ethereum. Look at that big fat chunk of Bitrefill's payment volume. This is for people. This isn't people speculating, sending back and forth, do DeFi nonsense. This is people living on crypto. This is what they're using. And of course, the Lightning Network is like very small there, right? But you can see that giant chunk of payments volume is in stablecoins. And I wonder why. Probably because if you earn, say, $8,000 a month in salary, you have $8,000 and then you want to just spend whatever on expenses you budget out, the unit of account and stuff, your purchasing power remains. The purchasing power of the US dollar goes down, but it goes down slowly enough that for the average person on a day-to-day, month-to-month, even year-to-year basis doesn't change that much. And so that's what people want to do. They want the benefits of crypto for kind of a stable volume. Now, Dash, on the other hand, all over the map. And it just, even if you believe in it and you hope the value goes up over time, it's still just really like inconvenient to have to readjust your expectations of like what costs what, et cetera, et cetera. And I actually did, let's see if that's what's next. Yes, I actually did a Twitter thread, and maybe I'll share this afterwards, but you can look on my Twitter until you see this thing about the volatility curse of crypto, because people speculate on things like Dash, but Dash is the gas token that powers the economy of Dash, the payments of Dash. So every time a an investor comes in, oh, I love Dash, and they dump a ton of money in there, which would be nice. It's been a while. Then the actual payments person, like the proverbial Venezuelan buying their KFC or whatever with Dash or Church's Chicken, all of a sudden that volume goes all over the place, and it harms the end user product of Dash. And so there's basically, I think it's a technical deficiency. The way this is kind of structured, at least for the short term. But the solution to this, of course, is to use Dash as a gas token to power a stable coin of some kind, whether it's the Bitcoin one I was talking about, whether it's a dollar-based stable coin. If you do that, then if someone apes into Dash or the price dumps or whatever, maybe the small fees of sending the token might fluctuate or whatever, but there could be obviously fee calculation mechanisms that change that. But the point is, their value doesn't go up and down based on what investors do in a highly volatile asset. And so if you have enough payments volume on a Dash-based stablecoin, for example, then all of a sudden, not all of a sudden, but over time, the actual gas price of Dash gets stable. The actual token of Dash gets stable enough that you can actually use that for the actual payments, like people like me have been doing all these years, but without being insane like I am, right? You can actually use it, and it doesn't go all over the map in terms of fluctuations. So that's the base. That's most of it, and I'll rush through the last bit but that's what Dash needs to do to get back on track, is to start to refocus its payments actual use case, but refocus exactly what people are willing to pay for. Make sure that, first of all, Dash can transmit money fast and cheap for what people want to transact in. No one wants to transact in Dash except for Dash holders, right? And we're not going to cure that overnight. So let Dash be the gas to transact other things. Number one. Number two, we need privacy. We need to actually use Dash's privacy mechanism. In the future, it might be nice to have a different privacy mechanism that is a little bit easier to use and offers better guarantees, et cetera, et cetera. But for the moment, we definitely need to be using our privacy functionality, which means it needs to be in light clients and mobile wallets as soon as we can. And of course, when Evo, we definitely need to use Dash usernames as seamlessly as possible to apply to everyone, to not just, oh, if you have a Dash wallet. Well, no one does. So if you want to send Bitcoin, you use a Dash username for that. You want to send Ethereum, you want to log in with Dash as far as like your MetaMask or whatever. You want to prove an identity here, whatever it is, Dash has to be your overarching kind of username thing. And if you will read these documents that Pete kindly linked here, which don't do right now. Wait until this is over, please. Um, you will see there's a lot of talk about referral links and stuff. I don't have a ton of time to get into that. I did get into it in detail there, but basically, we need some way of tracking measurable adoption and saying, "Oh, look, so much money on the network, flying through the network. Okay, look at all these transactions. That can be faked. What can't be faked is something that, if it's faked, it will cause a company, a motivated company, to go bankrupt, which is users and referral commissions. If you'll get Bitrefill to pay you $5 or $10 for onboarding a new user, that's because they're satisfied that that is an actual new user that will make them money. Otherwise, the company will go bankrupt. Same thing with the Spritz finance. If you want to, pay your bills with Spritz. Everyone here who's in the US, by the way, should be paying their bills with Spritz unless you can pay your bills directly with Dash already. But the point is, you can say, oh, like, I sign up this many people, you sign up this many people. Why doesn't a DFO or just an independent group say, like, I'm going to make a business out of marketing Dash? So then you go say, hey, look, I'm going to pay some salespeople a salary, like maybe the float tank guy. I don't know. I know you're watching this. Pay him a salary to go out there, hit the road, sign people up for Spritz Finance, sign people up for Bitrefill, get them using those and many others to pay for Dash. Go to pay with Dash, live on it, and get to where you can just say, okay, we made this much in revenue from these companies paying us. Get them to split the bill. Maybe get the treasury to split the bill. Say, like, hey, look, for each sign up that we get through these, we would like a compensation from the treasury or something, or, to basically say, because they're Dash users as well as users of these services paid us to onboard them, but then we'd like this too. Run an actual business out of onboarding people to the Dash network in a real meaningful way. The problem with the treasury is the only way you can measure success with the treasury is if masternodes will vote for you. And so that makes people focus on selling things to masternodes really well and not actually getting Dash users. So why don't we refocus on getting paid by whoever will profit from getting new Dash users? Now we can actually have a reasonable metric for success. It's all about incentives. And that's just where I'll kind of like end. I'll do a quick wrap up on this incentive document. The big problem, we'll switch to that in a second. The big problem is, as I mentioned, the treasury, whoever you can get to vote for you, that's how you make money on the treasury. You convince masternodes. So it makes people good at convincing masternodes, pitching masternodes, but not at actually delivering the end value. So part of it is, of course, this free money problem. If a lot of this is just rehash of the MNO plan proposal of back in the day, but basically, there's the costs of spending Dash, the actual costs of funding proposals and stuff is socialized across all Dash users by inflating the token, by spending inflated coins to do that. There's no sensitivity between what works and what doesn't. And if you have a good idea and a third of the network votes for it, it just doesn't happen. Sorry. If you have a terrible idea, but 2/3 of the network vote for it, even the third that doesn't has to pay for the mistakes of everyone. There's just no real sensitivity to that. Does it work? Does it not? And we've seen this time and time again. This is not an old problem where we've seen the Dash network constantly wringing its hands over, oh, why do proposal owners scam us? Well, okay, that's a little bit different, but why do proposal owners not deliver? How come we're paying all this marketing money? We're not getting anything from it. Oh, well, are we paying this group? Where's the ROI? First off, you have to calculate the ROI. The ROI of a Dash user is a lot easier once you start thinking in fees, right? If you get 100 people per day to use Dash and send Dash transactions and use Dash's privacy functionality, you can actually start to put a number on that, and then you can actually know if you're being profitable or not. But a few suggestions for this, right? So first of all, I would suggest, well, let me just get into this thing real quick. I wrote another Twitter thread, get on my Twitter. It's actually pretty fire. The Maya protocol has no inflation, as I mentioned. It's all fees. It's all paying customers. But Obviously, people who run nodes and provide liquidity get paid. But Maya also has another token, the Maya token, which people who promote the project, like adoption people, get paid in this token. And this token, holders of this token get 10% of all network fees. So the entirety of Maya's incentive model, which I think is fantastic, is built around fees, around paying customers, again, on revenue, and everyone gets paid only from revenue, not from inflation, not from something else. So that's the only way they get paid. And that is exactly a kind of a thought we should have, a model we should have with Dash. Try to find, how do we get people to get paid only when they earn their money, only when they bring in more value than they consume. So there's something very interesting. There's a lot of different links in here that I would definitely kind of go through. One thing I would really like to happen, I asked the incubator to do this a long time ago. It still hasn't happened. If someone else can make this happen, this is something Bitcoin Cash has called Flipstarter, which lets you crowd fund proposals, like a donation proposal, but it only gets paid out if it reaches the goal. If it doesn't, everyone else who donates gets refunded automatically. We need something like this in Dash, because if people, like this conference that we're at was not paid for by the Treasury, as far as I know, it was only donations. Donors are much like, if I have a fantastic idea and if I raise donations, I can make it happen, even if the rest of the network thinks I'm stupid. The sensitivity of the sensitivity of, does this actually make sense, is there, where it's completely socialized and lost in the Treasury. So as a final note on that, I do really think we need to implement Flipstarter, which Bitcoin Cash has. And I think we need to move to a model that everything that's not core development, maybe core development in the future, but let's just start with like other stuff, should only get matching grants from the Treasury. Okay. You say you need 10,000, say you need 1,000 Dash. You fundraise 500 through a Flipstarter, or in the meantime through just regular donations. And only at that point will you ask for a treasury proposal for the only other 500. That way you have to get actual people sold on your vision before you even ask for single money through voting. And even if it fails, famous CoinDesk headline, even if it fails, you still can implement your vision to a smaller extent. So then the best ideas for the risk takers still pay out. Something to think about. Read through these documents. I'm reachable on Twitter, on Discord, everywhere. And SmartReach says I could do that Flipstar, not really a difficult project. Yes, please do it. Dude, I will pay you some money. I don't have any, but I'll pay you some anyway. So thank you very much, everyone, for watching this presentation. I do think that Dash is one of the most exciting projects out there still. I do think Dash has built some amazing things for nobody. It's time to get somebody into Dash. It's time to, build it and no one will come. It's time to make that happen. So read through these documents, ask me any questions, and let's turn the ship around.